Stop asking, what's SpaceX worth? Seriously, if you think Wall Street has a clear answer, you haven't seen the analyst price targets. Here is the counterintuitive truth that every SpaceX investor needs to understand. The 25-day IPO quiet period expired. And analysts are $600 apart. Goldman Sachs says $205. Morgan Stanley says $300. RBC Capital says $225. Raymond James says $800, implying 399% upside from Monday's close. The stock closed Monday at $160.42. The gap between Goldman and Raymond James represents over $1 trillion in valuation difference. One of them is spectacularly wrong. But which one? Let me break down the bull case, the bear case, and everything in between. And stay until the end for the 3 secrets that will change how you value SpaceX forever. I'll admit something, when I saw the analyst spread, I was confused. How can 2 smart banks disagree by $600? Then I read their theses. And I realized, they're looking at different companies. Today, I'm going to break down the massive analyst divergence on SpaceX. By the end, you will understand why this is high risk, high reward, and who might be right. Let's start with the analyst lineup. Goldman Sachs, $205. Lead underwriter, conservative approach, cites the $4.94 billion net loss in 2025. Morgan Stanley, $300. Also a lead underwriter, more optimistic. Adam Jonas sees upside beyond the conservative estimates. RBC Capital, $225. Outperform rating, closer to Goldman than Raymond James. Raymond James, $800. Strong buy. Analyst Brian Gesuale, ranked among the top 3% on the street, calls SpaceX one of the defining industrial infrastructure companies of the 21st century. The gap, $205 to $800, equals $595 difference. At current share count, that's over $1 trillion in valuation difference. The consensus, 2/3 of analysts are buy or strong buy. Price targets clustered in the $200 to $250 range. The counterintuitive truth, most analysts are cautious. Raymond James is betting on the story. Let's start with the bear case. Goldman's $205 thesis, SpaceX is a LOSS-making company. 2025 revenue, $18.7 billion. 2025 net loss, $4.94 billion. The company trades at nearly 100 times sales. The AI segment is bleeding cash. AI operations lost nearly $2.5 billion in Q1 2026 on just $818 million in revenue. The Starlink profit engine, Starlink generated $1.2 billion in operating profit in Q1. But the rest of the company is burning cash. The valuation, even at $205, Goldman is being generous. Some valuation models peg fair value at $135 the IPO price. The counterintuitive truth, Goldman is pricing in success. Raymond James is pricing in PERFECTION. Now let me show you the moderate bull case. Morgan Stanley's $300 thesis, Starlink is a profitable business. Starlink contributed about 60% of SpaceX's revenue and generated $4.4 billion in operating income in 2025. 10.3 million users at the end of Q1 2026. FCC approved 7,500 additional Gen 2 Starlink satellites, bringing the total to 15,000. The AI compute contracts, Anthropic agreed to pay $1.25 billion per month through May 2029. Alphabet and Reflection AI also have significant contracts. The Nasdaq-100 inclusion, SpaceX joined the Nasdaq-100 on July 7. JP Morgan expects $4.3 billion in passive buying from index funds. The counterintuitive truth. $300 is optimistic but achievable. If Starlink continues to grow and AI losses narrow. Now let me show you the SUPER bull case. Raymond James $800 thesis. Starship is the key. Starship reduces the cost of transporting mass to orbit by more than 99%, while increasing payload capacity by an order of magnitude. The vision: SpaceX is the foundational platform for the next generation of industrial capacity. The TAM: Raymond James estimates the total addressable market approaches $30 trillion. The projections: revenue from roughly $38.5 billion today to over $837 billion by 2031. EBITDA from roughly $17.7 billion to $696 billion by 2031. The valuation method: 27 times exit multiple on 2031 EBITDA, peer group is 60.7 times. The counterintuitive truth: Raymond James is not valuing SpaceX as an aerospace company. They're valuing it as an AI infrastructure hyperscaler. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The quiet period signal. Wall Street analysts couldn't publish research for 25 days after the IPO. Now they can, and the divergence is massive. The gap tells you that SpaceX is the most debated stock on Wall Street. Secret 2. The Starlink profit reality. Starlink is profitable. $4.4 billion in operating income. 10.3 million users. Everything else is a bet on the future. If you believe in Starlink, $200 is reasonable. If you believe in Starship and AI, $800 is possible. Secret 3. The valuation gap opportunity. The analysts aren't looking at the same company. Goldman sees a money-losing launch provider. Raymond James sees the next hyperscaler. Who is right depends on execution. And that's the risk. So what should you actually do with this information? If you already own SpaceX, volatility is guaranteed. The $205 to $800 spread means the market is confused. Watch for Starlink user growth, Starship progress, AI compute contracts, and quarterly earnings, losses narrowing or widening. If you are considering buying, the Nasdaq-100 inclusion triggered $4.3 billion in passive buying. But the stock is down from its $225 peak, a 28% decline. If you are skeptical, SpaceX is still losing money, almost $5 billion in 2025. The valuation is 100 times sales. This is a high-risk, high-reward play. Here is my question for you. Do you trust Goldman's $205 caution, or Raymond James' $800 super bull case? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on the biggest IPOs and the debates that define them. I'll see you in the next video.